Hi friends, there is an increased pessimism around us. We don't know whether we are walking towards recession or whether we are already in recession. What we surely know is market discounts future. What does that mean? Means whatever price movement that you are able to see in the market actually is mirroring what will happen in the future. That means now we are very sure that it is not a good news. There is something negative which is awaiting. So how to manage this risk? If something is very unavoidable, rather than worrying over it, we have to have some strategies employed to manage that risk. In this video, I want to give you 3 ideas as how to build a recession-proof portfolio and use this as a chance to build your wealth. 1. Always avoid highly leveraged and cyclical stock. Highly leveraged means where the debt component is very high in any capital structure of the company. When the company it takes too much debt, it also invites tremendous pressure on it to get high revenue growth as well as maintain high margin. So the debt can be serviced, means interest can be paid, and also the repayment is done. In times of crisis, what we are seeing today, people start spending less. There is also governments which are trying to reduce money supply or liquidity in the market. This kind of situation of credit crunch will affect highly leveraged companies a lot. It pushes them to the stage of bankruptcy. So why to put your money at risk? Always stay away when debt is too high in any company. Second is cyclical stock. There is nothing wrong with the cyclical stock per se, but they always follow the trend in the economy. When economy is growing in the growth stage, these stocks also perform really well. Why? Because cyclical stocks, they represent discretionary items. Means when you have little extra room for spending, you consider this like your restaurant and luxurious goods. So when there is a downturn, people shy away from buying these goods. So these companies which are in this, they take the hit. So try to reduce the exposure to this kind of stock. Second, diversification. Nothing will explain the importance of diversification more than the time that me and you are currently witnessing. As a rule, usually, every asset will have its own return in a particular time period. Means there is a safe haven asset which will perform really well in times of crisis like our gold. And there is our stock equity which perform really well when the economy is in growth stage. So if you can diversify across all the assets and even while choosing the stock in your portfolio, it will work excellently in your favor. What does that mean? Always have little bit of everything. Have an exposure to ETF, gold ETF, and have an exposure to a little bit of cash and real estate, and depending on your age and risk appetite, bond as well as equity, everything. And also while choosing your portfolio, have a technology, have consumer play, because usually in the time of crisis, this kind of deep discount retailers as well as the consumer theme goods, they perform really well because there is always demand. You continue consuming some essential goods whether you have money or not. So these kind of companies do not suffer. So you should have an exposure. Pick from multiple sectors while constructing your portfolio also. So what is the bottom line? Diversification. Third, very important, managing our emotion. How emotion is related to investment? You might be wondering, right? Yes. Over the time, I have understood that as important as your asset allocation is, time in the market is, your managing emotions also holds equal importance. Because maybe a right decision at wrong time also will wipe out all the profit that your portfolio has generated till the time. There are 2 intense emotions, One is fear, another one is greed. Means you don't want to lose out anything. You just want to, protect your capital. I agree that matters a lot. Means you are always scared of losing. And you are too greedy. You want more and more, and that is a never ending circle actually. So if you can limit your fear and greed and control and don't let these two emotions to affect your decision, then you will notice the significant difference. Your portfolio will generate really good amount of profit. Because they say that you should be doing opposite of what is happening in the market. Analyze whether there is a greed or fear. Take opposite stand. When all others are greedy, be very scared. And when all others are scared, just now what is you are witnessing? Be very greedy. Just don't sell. Trust me, this kind of self-control will work a lot in your favor in the long run. Lastly, it takes immense courage for me to tell the last sentence. Recession is not necessarily bad. Why? Just look at the insane valuation and spiraling inflation. How can this be curbed without little bit of contraction? Agree, right? So this recession, it will test the bubbles that market expectation has created. And those companies with sound business practices and healthy balance sheet will find a way out and they will emerge as winners even from this situation. So don't panic, try to average the cost. What does that mean? Earlier you would have paid say $100 for one share. Now if it is available say 20, then if you don't buy right now, what happens? Your cost of acquiring that remains as 100 forever. If you buy now, 100 plus 20 divided by 2, that is the cost of acquisition becomes just 60. So use this opportunity to bring down the cost of acquiring the stock. Don't panic, sit with conviction, use this to buy more, average the cost and enjoy building generational wealth.